Actually, no, yeah, that's a good idea to keep waving that. Right? Here we go. Welcome. You're listening to the Best of Investing on News Talk 910, sponsored by Pacific Trade Exchange, your best in trade. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. For those of you listening for the first time, here's our format. A few guys sitting around a bar having drinks without the drinks, talking business with you, the audience, listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hoff of Pacific Private Money, California's fastest growing private lender, and Robert Schiff of RPM Mortgage. Our phone number is 888-912-1190. Now write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. July 4th is coming up here pretty soon, so got to check them out. And today's trivia theme is TV show spin-offs. That'll be kind of fun. Yeah. Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. We're also on television, Comcast Channel 26 on Saturdays at noon and Sundays at 6 p.m. Quick reminder, World Wraps in Corte Madera and Santa Clara is still giving our listeners a free smoothie with purchase of a wrap or bowl if you mention the Best of Investing. Go there for lunch today, best wraps in town, and don't forget to mention the Best of Investing for your free smoothie. Now today's guest is very special. Why? Because that's why. His name is Louis Batmale, and he is an investment advisor. And I asked Lou to come on the show as we've received emails from people who are asking certain questions that he is best able to answer. Lou, welcome to the Best of Investing.
Thanks, it's great to be here. I'm happy to be a guest.
Excellent. Okay, now let's.
We're happy to have you.
So far.
So far, yeah.
Just wait.
Well, yeah, that's right. We'll see how you do later on.
Good day in the market, did you hear?
That's right. Yeah, the market was up quite a bit today.
Now, why was it up? Is it up because of Obamacare passed,
There
or
were more buyers than sellers. That's what my dad used to say.
No,
what are they so happy about anyway on this Friday?
Yeah.
well,
Spain and Italy are in the World Cup, and one of them will win. And that the economy and that country will be good. So
See, my uncle is from Germany.
Okay, well, hold on. Let's let our guest speak.
Well, no, to your point, I think didn't Germany beat Greece in soccer? Wasn't that the big story? They're like, oh, we're going to own you in soccer and own your country. So it's like a double whammy. It's like total domination. No, we had a lot of interesting stuff that went on this week. I think, frankly, everyone's tired of the up 100 points, down 100 points every single day. We had a nice rally on Friday, and a lot of it had to do with Obamacare getting passed. People like to know what's going to happen. The undercurrent of the market really is right now, I think, 3 big things. Predominantly, that is, who's going to be the next president. Everyone has their opinion. The debt ceiling debate, which comes up again, which was here last summer. You guys remember this? We had the big sell-off, and then, of course, all the tax legislation that everyone keeps talking about on all the TV stations. That we really need to know what to do, and companies don't know what to do. Companies are paralyzed or frozen, going, if I make this decision, how's tax policy going to affect me? How am I going to hire people with a tax policy that could have a huge payroll tax increase? They could have huge capital gains taxes, overseas taxes, all these things. I mean, taxes are driving our economy right now. So what we did find out is, one, the Obamacare situation is settled for now. Stabilized and will be legislated, probably down the road. And then more importantly, the EU, as you mentioned, came through and said, hey, we're going to, stabilize things. Spanish yields drops. You guys are in the mortgage industry and finance. Popularity drives the price of bonds. We can talk about it later on, but really when you see these Spanish yields go down, it means everyone starts buying their bonds again. They're going to be in business. That's really the...
Is that anything like Spanish fly?
Oh, man.
Mark.
Well, we're all on our way to
family show, people. Family show.
Okay.
Okay.
Yeah, red solo cups aren't a family show. I don't want to say, but yeah.
One of the reasons we wanted to have you on also was we've been receiving emails from people who are asking what a 529 plan is. And I know it's not a signal for football hike, so can you explain what is a 529 plan?
520 plan, it's, let's keep it simple. It's a way to save for college on a tax-deferred basis. The greatest benefit that we've seen out of financial product probably in the last 20 years is the fact that if you use that money to pay for a college expense, you pay no tax on any gains in that product. So if you put $10,000 away in 2000 and it's worth $20,000 today, and your child goes off to college, and you pay that college $20,000 for tuition expense, living expenses, books, other items that you have, boom, that $20,000 comes out tax-free.
And what kind of limitations? I mean, doesn't have to be graduate school, or can it be graduate school? Can it be, both undergrad and graduate?
Well, that's a great question. This is still bantered around a little bit. Really what it's supposed to be for is college, but colleges are secondary educational institutions. So I've talked to people who have kids that have gone to culinary school, some vocational colleges. They can use the money for those things. What this thing was utilized for initially were grandparents passing money down to grandkids. And years ago, you remember the old UGMA or UTMA accounts that everyone had?
Uniform Gift to Minors Act.
Right, and here's Grandma's Pac Bell stock, here's Grandpa's Pacific Gas and Electric stock, which are great stocks, pay a dividend. But if you sold them, you paid a tax.
Yeah.
And if you sold them, under the age 18, there was a kiddie tax. But more importantly, the kid could go buy some Spanish fly with his new Ferrari, his girlfriend, down in Tijuana. The money was not controlled. This way, it's meant for specific expense. And more importantly, the trustee or the person who gifts the money, grandma, grandpa, mom, dad, controls the money. So buy and hold it. If all four of us were brothers and someone didn't go to college, we could take his 529 and apply it towards someone else's college expense.
I mean, sort of like that HSA, the health savings account, where you get tax deduction and then it builds up tax-free, as long as you use it for medical expenses.
Right.
When it goes in, is it avoiding taxes at the time, like IRA?
Like you get a tax deduction.
Actually not. You don't get a tax deduction.
Okay.
So
it's after-tax dollars you put into the...
After-tax dollars, and they grow tax-deferred, though.
So it's like a...
It's like a Roth.
Like a Roth IRA.
Now, is it tax deferred or
Roth.
tax-free? That builds up. Because like when you use it for secondary education, you don't pay the taxes on that.
Right, it's tax-deferred build-up.
Okay.
And then when it comes out tax-free.
Tax-free. Okay.
Now, there are three
That's
states.
even gooder.
Yeah. Now, I know this isn't part of our broadcast. In Pennsylvania, Kansas, and Missouri allow you to take a state. They allow you to take a state deduction for contributing to a 529, but it doesn't affect California.
If you go to their state university.
California's they don't give you any kind of deduction.
Well, I don't
No,
know.
California does not. So it. Now,
We don't believe in education.
No, the struggle has been that people don't understand how these work or how to get them. They're you get them from your advisor, you get them from any local broker dealer, and really what happened was states sponsored these things. So you have a state-sponsored 529 plan. So fund companies contracted with states to manage the money. That's what gets confusing. Like you pick any fund company out there in the complex. It could be an index fund or a managed stock fund. It's like, well, I'm with this company. Well, no, that company's based in this state. It could be state. Your 529 could be specific to the state of Missouri. It doesn't matter. You can go to school anywhere or live anywhere and still contribute to that 529. And that's what's confusing for a lot of people. It's like, well, who am I with and what's going on? It just doesn't matter.
And then grandma and grandpa can decide where to invest the funds, right?
There are certain there's certain investment choices in there, and the big thing is you can't buy individual securities. You can go into a spot where you can be totally allocated towards securities or totally allocated towards bonds if you want to. But the other thing that most people dealt with were these age-based portfolios. And that's where a lot of confusion came up, especially around 2008. Even if you're enrolled in college and of the age of maturity, like let's say you invested in the 2012 fund when these first came out, and now it's 2012 and the market drops 10%, your funds will drop 10% even though you're in college. The money's still invested. People think, oh, gee, once you hit the age of maturity, when you're supposed to go to college, the money's all in cash or it's all in bonds. Not true. It's still invested if it's in those core portfolios. And that's a big mistake a lot of people make.
So we're talking about 529 plans, and you said they're similar to a Roth IRA, meaning you make contributions and the money's supposed to be used for education, and it can grow in there tax-free if it's used for education. Can you set up an account with, like, for example, I have a Roth IRA account. Can I go to that company, the custodian, and do they do 529 plans, or is it who do I have to go to set up a 529 plan?
We'll have to be completely compliant, so you have to talk to your tax advisor before making any decisions. But well, you cannot roll over a Roth IRA into a 529 plan.
But, no,
but you can talk to the same provider.
Yeah, same provider.
Talk to the same provider, but you can't take the Roth money and put it into a 529.
Yeah,
Okay.
so I guess do most companies, if they can set you up in an IRA or be it a Roth or whatever, can they also do 529 plans? I guess that's
For the most part, yeah.
Most
Oh,
part,
okay,
yeah.
so Yeah, 'cause I was
Absolutely.
confused
Yeah.
about the state sponsorship and whether you had to do it through some state of California website or something really.
You can. The best resource is savingforcollege.com because they have a listing on every single 529 plan. They also cover the Coverdale Savings account, which we don't need to go into. Right now, it's another form of saving for college as well. But that website, again, savingforcollege.com, is a great resource to research anything that's been offered to you or any ideas you might have on 529 investing.
Okay, we're in studio with Louis Batmale, who's a registered investment advisor, and when we cut to commercial, we're going to cut to a commercial break. When we come back, Lou's going to still be in the studio here. We're going to get into other retirement type vehicles. Here is the first trivia question. Laverne and Shirley was a spin-off of what TV show? Hold on, don't answer yet, guys. The first 3 callers with the correct answer are going to win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Laverne and Shirley was a spin-off of what TV show? 888-912-1190. Make sure to include your name, your email address, and speak slowly and spell out your email for us 1 letter at a time. And don't touch that dial because we're going to be right back. Excellent.
Awesome.
Good job.
Good first segment.
Yeah. No, it wasn't from the Three Stooges. That's not the spinoff, Mark.
No, off to Happy Days. I was
Yeah.
watching the other day.
Church of the Fawns. Talk
My
about
kids,
that.
my kids were around the house.
Headphones off because he's
Oh, okay.
letting everyone know it's station break.
And then when you're ready, we'll film your leg.
Yes,
Yeah,
that's
so
right.
Yeah.
we had.
De-waxing.
I was watching Pulp Fiction.
Oh, yeah.
You kind of forget about it, but my kids through cable, they kind of learned what Happy Days is now and all that stuff.
Yeah.
I had 4 kids. They go, Samuel Jackson goes up there and goes, "What's the truth about Fonzie?" And he goes, "Oh, he's cool." And then they go, and he goes, "We're all gonna be cool, right, Yolanda?" And he goes, "Yeah, correctamundo." And I'm like, "Oh my goodness."
That's right.
My kids are like recognizing, like, "Oh, I recognize that term." It's like, oh man, this is not. I gotta turn the channel. This is not inappropriate. When my 6-year-old started quoting The Hangover, it was all over.
Yeah, oh,
Yeah.
gosh.
My wife gave me parental control. So
I still haven't watched this part 2. I just, after watching the first one, I
Or
can't
is it-
imagine that the sequel is.
Oh, it's nuts.
Listen, as soon as my kids start quoting Borat, I knew it.
Yeah, exactly.
I
That is
couldn't
me
make it
too.
through that whole movie either.
Yeah.
You didn't?
Terrible. No.
Is that the one-
Especially when the guys went
The new
naked
one?
and wrestling, that was it for me.
Yeah.
Yeah.
Borat's a little disturbing.
Well, Borat is a movie, but the guy who
Sacha Cohen.
Sacha Cohen, he's
Sacha
done a couple
Cohen,
others.
yeah.
Yeah, I haven't watched any.
Yeah, he did The Dictator. I haven't seen that one yet.
You know what's weird is he went on Howard Stern's show as himself, and he goes, "I've only done this 3 times ever."
Oh, really?
It's pretty bizarre, yeah.
He's actually
Cigar
not a bad
guy.
looking guy, but
Yeah.
Yeah, no, he has an English accent,
Yeah,
which I never
yeah,
would have
'cause
thought of.
he's-
But yeah, he's just like talking and like, "Oh, hey,
Hey,
Howard."
he looks normal.
Well,
Right.
he's usually Ukrainian
I
accent.
know.
Yeah.
He usually looks like a complete retard when he's
Yeah.
when he's dressed up as his role.
That's pretty awesome.
Okay.
Yeah.
So
so
we're
okay,
jumping
so
on. Now we do mortgages or?
no,
No,
we'll
we're
stay,
gonna talk-
we'll stay with you, and we'll
Yeah,
get into
me.
the
Let's
retirement
go.
planning after age
Thanks,
60
sir.
because again, I got
Retirement planning after age 60,
from
yeah.
people. Yeah.
Yeah, we talked about real estate.
How about retirement planning at 52?
Or-
Keep
Wait,
plugging
what's
away.
That's right. He's after 60. How about retirement planning at 52?
Yeah.
That's the French.
52
That's-
and
I don't
6
say-
months.
yeah.
Yeah.
That's the French.
Yeah.
Yeah. I'm 52 and a third. Do you have any kind of special planning for me?
All right, good.
Are you ready, Mr.
Here we
Are you
go.
ready, Mr. Kaima?
Triman's almost ready.
So you like this sticker this time?
Oh,
What
I
happened
haven't
was
got-
I
sticker
during
time.
during the winter time I'd be wearing pants because it was cold, but
Right.
in studio here I get hot, so I was rolling my pants up. So he decides one day to start filming my leg because I rolled my pants up, right? Well, what are you doing? So the next week I started putting stickers on my leg to surprise him. Now it's shorts, so it's a little easier. You got it?
What's it say today? I got it.
What does it say? You got to repeat it.
Oh, I got to repeat it. Sorry. Repeat. Kramer, how does my hair look? Everyone in place.
Is every hair in place?
Yes.
Okay.
All right.
Oh, man, I got to do that waxing. Look at that, all the hair
Especially
comes
on
off.
the paper.
Gross.
Hairs on the paper.
That's it.
You gotta do the John Kerry thing. I have a $400 haircut and I just dropped my $1 million girlfriend. Or John Edwards.
Oh, okay. I was wondering.
Before, that's right. Before,
That one makes sense.
Carrie's wife. Yeah, Carrie's wife is worth more than he is.
Yeah.
So it doesn't really matter.
I know
Mine's
I
Kendra.
told you I was having an affair while I was with you when my wife was dying of cancer, but I lied. That's what he said.
Really? I lied.
But
You don't have cancer?
I lied about the affair.
Oh, well, that you lied about.
To his girlfriend.
Yeah.
Oh, yeah. You always got to get that straight because
Gotta
your
love
girlfriend, which is,
politicians.
yeah.
I'm Teflon. Or Willie Brown. Which is a better solution?
Okay, you guys ready? Yep. All right. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hahn of Pacific Private Money, Robert Schiff of RPM Mortgage. I'm just going down the list here, and Louis Batmale, who's a registered investment advisor. When we get to the first commercial break, we asked this trivia question. This is TV spin-offs is the theme. Laverne and Shirley was a spin-off of what TV show?
1, 2, 3 o'clock, 4 o'clock.
Okay, Mark, go ahead and answer.
Happy days.
Correctamundo, as the Fawns would say. All right, and Lou, one of the reasons, again, I wanted to have you in the studio here was because I received an email from a listener who said, you know, I'm age 60 and I lost a lot of money in the stock market from 2008 to 2010, and how do I go ahead and recoup that? Now, Mark and I were talking off air that, you know, I'm 52 and a third. So, do you have any advice for us 52 and a third?
Yeah, right.
And also the 60-year-old, what kind of retirement advice do you give?
Well, it's first of all, it's challenging. I respect everyone that's participating in the market and what's happened. I'm concerned like you are. As an advisor, it's tough talking to clients on a daily basis who have lost money, you know, with some investment decisions that didn't work out. And you know, we're all in this together. So, you know, my encouragement, first of all, is to start talking to people, not family members, but advisors and other people.
I saw in the paper this week that there was a poll of who plans on retiring at age 65, and like 74% of the respondents said they were not.
Oh,
can't
no,
afford
that's
to.
Unbelievably
you know,
high percentage.
that goes right to the point. I mean, really, when it comes to
What percentage of them have a job?
I don't
A
know.
lot of them had to go back to work.
Yeah, no, this idea of a retirement plan, especially after the age of 60, I mean, let's face the facts. You know, the economy's not lying to us right now. With very low interest rates, very low CD rates, there's not a lot of secure investments out there that people are used to and say, well, geez, if I just park this in the bank or in this single investment, I'll receive a nice income. For those who have lost money, the big thing is this. If you're going to live 3 years, don't worry about it. If you're going to live 25,
Just have fun.
Sorry, got to be direct.
Yeah, right.
Well, you know what, you make a good point. It's not just the fact that people lost money, but the interest rates are so low that it's not that they can afford to just have X amount of dollars unless you're, you know, got a couple of $1 billion just sitting around in a 1% account. That's fine.
And that goes directly to my point. It really is a function of getting a plan together. You know, how much am I going to get in Social Security? Do I have a Medicare supplement? You know, what am I going to retain my home? Am I going to travel? What extraordinary expenses could occur? Do I need a new roof, a new car eventually? All these things will come up. But the biggest thing we just joked about here, 53 and a half or 59 or 69 or 78 nowadays, is people are living longer. So the struggle is this. People are used to the sunset provision that everyone who has a firefighter, police officer, or government employee relative, oh, you just flip a switch and you're retired. The income turns on and are all ready to go. Us as individuals now who are responsible for our own retirements through this 401k program we have or other retirement vehicles are really stuck with how much money do I have and what can I do to make it last as long as possible.
Well, I've already done my plan. I figured out I can retire at 147.
Perfect.
It's like my friend said, his life was perfect as long as he died in the next 18 months.
Right.
Well, you know, that's why the popularity of all these programs for, you know, how to make money on the side, everything from multi-level marketing to just, you know, how to get in business for yourself, how to do something entrepreneurial for extra income, how to make money on the internet. I mean, that's the stuff that's never been more popular than it is today for that very reason, that we're trying to catch up. You know, those of us whose 401ks, as people like to say, turned into 201ks, or our real estate portfolio is not what it used to be, and we're all looking around for ways to make money.
I mean, I figured I could make a lot of money by taking out a life insurance policy on myself. But then I realized that I can't be my own beneficiary, and that wouldn't work too well, would it?
No, you cannot. It's unfortunate. I mean, and really the key is this, is that if you participate with those that are participating in the economy, you will eventually, not immediately, eventually with patience, be rewarded with investment returns that mimic the economy.
Mm-hmm.
And that's the big step that everyone forgets. Everyone wants to be in the market one day, out the next. Geez, if it's going up, I'm happy. Like this week, at the end of this week, I should say. You know, a few weeks ago, oh, I'm extremely upset and frustrated. That's not investing. You know, that's tactical investing, which is a whole other conversation we have another time. But really, what it's about is sticking with the plan, sticking with those companies that are going to be around, that people are going to do business with. We're going to brush our teeth. The lights are on. Oh my goodness, those are two people we're going to be working with in the future, no matter what happens to the economy. And maybe invest there, or work with an advisor and say, well, geez, I can't risk all my money, but maybe my allocation should be set differently. Like, if I have $100,000, I can't go below 50. If I go below 50, I'm really going to have a problem. Okay, well, then let's take $40,000 or $50,000 and put it in some type of income-producing asset that works for you, and then take the other 50, invest it maybe in dividend-producing securities or other things that aren't super risky but will provide some return and participate in the economy. Because the bad news here is costs are going up, interest rates are going to change, and if you don't prepare yourself, it's going to affect you down the road.
What kind of income investments do you like nowadays?
Well, if you're in a taxable account, there are municipal bonds, both on the federal level, bonds that are located around the United States. There's bonds located here in the state of California. Most are worried about the fact that California doesn't have a great balance sheet right now, which is very true.
Yeah, but it's sort of like Chrysler. When they were having big problems in the late 70s, I remember telling my dad, he was worried about, because I said, hey, I think we should buy Chrysler, because I can't imagine the government letting them go bankrupt. They have too many employees. Same thing with California. I don't think the federal government's going to allow the entire state of California to default on its general obligation.
Well, what about individual municipalities? I can say that.
Yeah, that's the one.
We have the news out of Stockton this week. And
Yeah.
that's a headline. That's a headline that's going to be thrown in everyone's face for a while. Why invest in munis with this problem? So, Lou, why'd you bring it up? Well, one of the main reasons is this: by mandate, the money that comes out of the Treasury of the state of California has to go pay off municipal interest first, before it does many other things. So, before people get paid their paychecks as government employees, municipal bond interest gets paid.
That's
Pretty
general obligation bonds.
General obligation
Yeah,
bonds, and also some
revenue
city
bonds.
bonds. Now,
Okay.
granted that Stockton's a problem. Other communities like Stockton have had issues, but by and large, there's a lot of, one quote a lot of managers use is, I don't buy anything that's outside of 7 miles of the coast of California, because that's older real estate in places where people are going to pay their taxes for keeping the water on, keeping the toilets
Well,
flushed.
Vallejo did file bankruptcy.
Yes.
And I haven't really followed it recently, but,
Yeah, I don't know what
anyone,
happened.
it still exists, right? Vallejo's still there?
Yeah.
I know I drive through it when I
think
go
I
to
drove through it.
Yeah.
No, Vallejo does exist. Stockton's going to exist. They're going to refinance themselves and come back, hopefully financially stronger. The big key is this to remember. Talking to municipal managers, and I had a conversation with a couple last week. Look at what happened in San Jose on election day. Okay.
What happened on?
The pension reform bill that got passed.
Oh, yeah.
And everyone talks about the unfunded pension commitment
Sure.
by municipalities and the reason not to buy municipal bonds. And let me tell you, there is a storm brewing across the country, and we're all responsible for it. You can't.
You're responsible. I'm not
Well, no,
responsible.
well, you can't. Here's my point. I'm being too.
blaming me.
I'm being
I
too
didn't do it.
serious.
I didn't do
Talking
it.
to me?
I'm being too serious here, but in the end, retirement benefits have increased over the last 20 years with a great record market. Now the market's not doing so well, and they're going back saying, "Hey, we got to reduce benefits." Everyone's like, "It's a contract. It can go up. It can't go down."
Yeah, that's ridiculous.
That's so. I think I read someone. Was it Rhode Island had another referendum? Other states, and what they're saying is, stay tuned. Like Obamacare, this is going to change. So
just like Social Security. I mean, I honestly do not count on that for when they'll change the dates. They'll change the fact that if you have more than $3 in your account, I'm sorry, you're rich. You're not going to get. I mean, something's going to change because you can't just keep.
Well, when I
printing
started
money.
Social Security at the retirement age of 65, I think that was the life expectancy for people.
Right.
So if they
So
had
it's-
gone back to what its original plan was, you wouldn't be getting it till you were 70 or 75, and
Or 85.
if it
Right.
clicked it up to 100,000, which is probably like John Beresford Tibbs' millionaire at the time, the Social
Well,
Security
yeah, I mean,
got to $1 million.
well, I had a client who, her husband died in 1961, and he probably put in maybe $3,000 in the whole system, and she was taking out $1,000 a month,
Wow.
and she lived till she was 101.
Right.
I mean, and you know, God love her and all that, but she had all the money in the world. She didn't need Social Security, and yet look what happened. I mean, that was a great investment.
For us.
Yeah, that's really where it worked. And what the problem that we're faced with right now is, you know, not to be an actuary, is the number of people receiving Social Security. That's really the overhang on the government, is that there's 72 million people that are going to receive it, almost a third of our population.
And they're going to be collecting it for a longer time.
Right.
Really
That's it right in the
But it wasn't last year the first year that they had not done the increase cost of living. But it's not just the retired people. You know, there are a lot of people who are getting Social Security who, you know, haven't put quite as much into the system. And, you know, obviously you got to take care of the widows and orphans, but a lot of people take advantage of that. You know,
there can be. I mean, back to retirement planning, to bring this point together, when you're looking at Social Security as your base income and layering, you know, your expenses and what you need on top of it, that's, you know, if you have $100,000, you get $1,000 more a month to live, you're going to have money for 8.3 years. If that same $100,000 earns 4% during that time frame, you'll go for 24 more months or 10 years. That's really what retirement planning is all about. Understanding that your money will last longer in other places than the bank and CDs currently, and you got to implement those changes even though you feel uncomfortable. You invest when you're uncomfortable. You know, look at 1974 when we're off the gold standard. I mean, we came out of that, so.
Yeah, the market dropped 50% between 73 to 75.
Right.
I think it dropped like a lot more. Okay, we're going to cut to our second commercial break, and the TV trivia theme. The theme today is TV show spinoffs. Joey was a spinoff of what TV show? The first 3 callers with the correct answer are going to win a free 3-day, 2-night stay at the Lighthouse Resort. Again, their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Joey, that's the name of the show, Joey was a spinoff of what TV show? Again, 888-912-1190. Make sure to include your name, email address, and please remember to speak slowly and spell out your information, especially your email address for us, 1 letter at a time, and we will be right back. Good.
Awesome.
You know the answer to that.
I do.
Yes. Sorry, did I take it down too much? That was not what you wanted. That wasn't a fun segment.
That's okay.
Social
Well,
Security.
that's
That's
fine.
okay.
You know, people,
We like
a lot of people like our show because it's just,
It should be very.
It's just banter.
Yeah,
It's just
yeah.
wherever it goes.
exactly.
Unless Spanish fly.
Yeah, we don't like that one. Mars.
Isn't that the biggest Ponzi scheme there is? Spanish fly?
Probably. How you doing there, Mr. Kramer?
Okay.
Hansi,
Lou,
we need somebody
by any
to
chance,
run
can you
for
take that
Congress
water
named
bottle
Hansi.
that
Yeah,
you
that's
just
right.
and push
Yeah,
it
can you imagine
backwards?
being his kid?
No, the other
It's
way.
Hansi,
I'm sorry.
Fonzie, not Fonzie.
Yeah.
Thank you very much.
That one.
Thank
Call
you.
me the Ponds.
What amazes me is you know, the bonds that aren't yielding, you put your money in stocks that are yielding 3, 4,
Oops.
5.
Right, no, yeah.
Don't delete it.
Bloomberg had 2 charts yesterday. One was incredible. One is this is the first time in 1955 was the last year where dividend yields were higher than the 10-year Treasury, and the other one was what it costs for us to live to age 78, and we spend the most in the world on that thing. I couldn't believe those 2 charts. They were really startling. They always put out a chart of the day. So
Do you like a lot of dividend thing stocks?
I don't, you know, my clients who are looking to retire, I don't want them to see gyrations, but I mean, these people, I mean, I had a client, she had $200,000, her account went down 10,000, she was on the phone yelling and screaming, and I'm like,
Because it's all your fault.
wow.
You know, that's the sort of thing that got me out of financial consulting. I just couldn't deal with people like that. I had a situation where this one
your
lady,
fault.
yeah, she was still working even though she was in her early 70s, and she called me up one day and she said, "Edward," I said, "Yeah." She said, "I read in Money Magazine."
Yeah.
The first thing, Money Magazine. I read in
last
Money
year's
Magazine
news.
that, you know, XYZ fund was the #1 fund last year. I said, "Yeah. Oh, and your point is?" She goes, "How come you didn't have me in that fund?" I go, "There's back then 2,000 or 4,000 mutual funds, and you want to know how?" I go, "If I was like that, I'd be at the racetrack."
So you say, I'll tell you what, we'll have a new pack just for you. We'll create, we'll go to the government, we'll say, she wants to be able to buy the stock at the price it was 12 months
Yeah,
ago.
yeah, exactly. That's
Just
right.
1 or 2 times a year
Yeah.
for an unlimited amount of money.
Thank you, Mr.
Just,
Madoff.
just her.
Yeah.
Yeah.
That's what Bernie Madoff did. Yeah.
Yeah.
That's really what his game was.
Well, he didn't even buy the stocks.
No, yeah, he'd go back and backtrace when he should have bought a stock through his
Yeah.
market making thing, and then he'd pretend he bought the stock then, so it would go up. He'd go back and back.
It was all paper. It was all paper.
It was all paper, but he'd go back and retrace the trades that should have been made, and that's what the
wow.
whistle.
That was real.
Yeah.
It was real. He went back and saw the stock was at this time.
Yeah.
So
The whistleblower.
But-
that's what the whistleblower said. He goes, he
So
batted
when- so when the
1,000%. It's
audit-
impossible.
So when the auditors
they never
came in,
audited.
it,
They never
yeah.
audited. Why
They never audited.
Bernie Madoff? He's gold. Why audit him?
Yeah.
It's a waste of
Well,
money.
that was in the
So
fact.
the guy-
I can't imagine they
Yeah.
think anybody's gold.
Yeah.
Look at
Well,
the people that-
he was pretty in tight with the NASD. You look at what the levels he went to.
He was
but-
a celebrity, and so
yeah,
no
he
one
was.
questioning him.
I mean, I'm not
He
trying
was
to.
on the other side.
Yeah, he was on the other
a
side of
regulator.
transaction.
Yeah.
The business his sons ran was a great profitable business, but it was a market-making business which traded stocks every day. So they knew they're trading Microsoft.
Yeah.
So they knew what the Microsoft price is, and he goes, "Well, I want to own Microsoft. I wanted to own it on May 1st. Look at that.
You could see that looking in the paper every day.
Well, no one knew he was doing it though. That was the
Yeah,
problem.
yeah.
No, I understand, but I
Yeah.
mean, you don't have to be a market maker to make that scam. All you have to do is go back to
Well,
Google and go, well,
yeah,
what was the
But you
but
price?
have to
yeah.
have people giving you money that you give monthly
Yeah,
reports
right.
to. So what are we
Right.
going to do with these monthly reports? I got a good idea.
Yeah. There's 13.
You-
Wait a
he
minute,
was
though.
a genius
That should
at
be
the
against the
monthly
law.
Yeah.
Ah.
It is.
They probably will make it legal now.
Yeah.
So what's our
He should be in
questions?
trouble.
Are we
Oh,
doing
yes,
email
that's
time
right.
next?
Okay, yes, going to email time. Okay, and a couple of emails we received. Robert, we received an email from you that says, I have heard the term buy down the rate.
Ooh.
What does it mean, and is it a good idea?
That's a good
And Mark,
question.
we got one from you here for you. It says, how can I protect myself against unscrupulous hard money lenders I've dealt with in the past? Holy smokes, what did this guy deal with?
Yeah.
How do you protect
God, your
yourself
name
from
sounds familiar.
unscrupulous hard money lenders that you've dealt with in the past?
So the guy obviously had gotten a loan from someone, and you know what? I have a story that's similar that I can kind of feed into.
I'm
that.
just wondering if that was an investor who may have invested with a hard money lender.
No. I think it sounds like a borrower.
Okay.
Yeah, someone who
Okay.
like who's
Okay,
bait
no,
switch.
yeah.
type
Why
of
would
guy.
unscrupulous
Expensive or
they charge
upfront
high interest
fees.
rates?
Yeah,
probably
exactly.
bait and switch, last
Yeah.
minute,
Or
added extra
just
fees
they-
on
You guys
there.
here's
do
a-
next week or no? With the holiday? Or take next week off?
Well, the holiday's Wednesday.
Wednesday.
Right.
Yeah. No, we'll be here Friday.
Jeez. Some time for yourselves.
Oh,
He's a taskmaster. You should see him back. Well,
Yeah. What are the terms 24/7 to you?
Yeah.
Exactly.
Okay.
All right.
Oh,
Makeup, please.
Makeup.
Wait a minute. Is that the same one you used on the dog?
No, the other makeup.
Okay.
Can I get some foundation?
Yeah.
Sorry. Plug in some wrinkles.
See, now
You're
every
looking
hair's
good,
not in
Edward.
place.
Hmm?
It
Yeah,
was.
since
Every
they came
hair
up
was
with
in place.
HD.
Now it's not.
Oh, no, I didn't get
You
it.
didn't get a
But
hair?
you watch some of these interviews with people and you just think, God, they're a sweaty, gross mess. What's
Right.
going on? It's
Oh,
like,
there was a guy on Shark Tank like that one time. The poor guy wore a turtleneck,
Yeah.
not realizing hot lights and stuff, and he was just
right, the HD, you see
Yeah.
Oh my
every
gosh.
thing.
Oh, I saw
Poor
Joe
guy.
Scarborough get interviewed on Fox News, and he was like in some place in the Northeast, and he
Yeah.
was baking, like in his suit. He's
Yeah.
like, and he goes,
He wears-
"Someone get me a towel." It's just like,
Fox
That's
Network
embarrassing.
had one of the guys, Sports Network, yesterday, and he showed him coming out of the steam bath. And he said, now I'm ready for going to Atlanta and broadcasting.
Yeah, really.
All right.
Okay, so we'll get into email time, and then, again, still just ask questions, chime in, all
Yeah,
that fun
chime
stuff.
in.
Ready?
No rules.
Yes. I can't do this anymore. Shoot.
Tell you.
Let it rip.
Who knows the answer to the trivia question?
I do.
Oh, 2 out of 3. Pretty good. All right,
it's a
here.
demographic thing.
Yes.
Yeah, I'm sorry. You have to be under 80 to know this question.
No.
If it were a mash
I'd say-
question,
I'd
he
say
could.
under
That's right. You and I
35,
were the
yeah.
math. We know those ones. Okay, here we go, boys and girls. Boys, there's no girls here today. Okay, here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hahn, Robert Schiff, and our special guest, Lou Batmale. And we cut up to the second commercial break. We asked this trivia question. And again, we're talking about TV spinoffs. Joey was a spinoff of what TV show? And I understand 2 out of 3 of our
I'm waiting to hear.
Lou knows that one.
It's Friends. I think.
Friends. It is correct. That is correct. Very good.
I just lost my man card, but that's okay.
That's okay. That's kind of a fun show. Listen, Jennifer Aniston still.
Oh yeah.
Yeah, she still looks good. Okay.
Enough said.
If my beautiful wife is listening, don't worry, sweetie, you're still number 1. Okay. We received a couple of emails here. Mark, here's a question that we received an email for you. How can I protect myself against unscrupulous hard money lenders I have dealt with in the past? I'm guessing this is someone who borrowed money.
Yeah, it sounds like a borrower. And for new listeners, my company is Pacific Private Money, also DBA Pacific Private Money Loans. We're a hard money lender based in Marin County, and our typical borrower client is a real estate investor. Banks have generally stopped making loans to real estate investors, so the companies like Pacific Private Money and others have kind of stepped in the last 5 years to fill that void, and so we're busy making loans to people who are buying, fixing, and flipping, or looking to buy rental property, or maybe pull cash out of property you own, because generally if you go to the bank for that request right now, they're going to tell you thanks but no thanks, because they're busy doing refinances these days at 3 3/4%, or
Which we'll get into,
which
Robert,
we'll get into,
after
yeah,
that.
right, yeah,
When they can.
and good for them. So,
Yeah,
but if you're looking to buy real estate as an investment, because as we were talking about earlier about bonds and stocks and CDs and low interest, and you're trying to figure out how to make some real money with your money, and you want to get in the real estate market, if you need leverage, you got to really come to a hard money lender or private money lender. They're interchangeably, they're basically the same. The term means the same thing, and you would go to a company like ours and apply for a loan. So the listener says, how do I protect myself against unscrupulous hard money lenders? And I'm guessing that person probably ran into somebody who was either doing one of several things. One would be there are people out there, companies out there representing themselves as lenders who would then ask for an upfront fee. Even though that fee might not be a lot of money, it's still real money to you, and it may be anything from $500 to $1,500 to $2,500 to process your loan application. We do not charge any upfront fees, and no good or reputable private money or hard money lender in the Bay Area or California, for that matter, should ever charge you an upfront fee. Secondly, what oftentimes happens, and what I hear, is that kind of like a bait and switch, where you're represented, oh, we can do that for you, and here are the terms and conditions. We can do it for 3 points and 12%, for an example. And then they come back after they've strung you along, taken your application, and you need to close, because you're going to lose your deposit if you don't close on that purchase. And they say, oh, by the way, I'm sorry, but our lender came back and he's got these concerns, and we got to charge you 6 points, and we've got some extra fees. So all of a sudden it becomes kind of you're stuck, and you end up having to pay higher fees. And again, that is just that no reputable company should ever do that. We certainly don't do that at Pacific.
So how does
So,
one... Go ahead.
Well, so Mark, if somebody's coming to you for a loan, it certainly is dependent on checking them out and how their financial picture is, still somewhat, and how their credit is, and an appraisal, I assume.
Well, yeah, but still, I mean, we write letters of interest all the time and say, well, here's the terms and conditions that we believe we can provide to you. And now, certainly sometimes the guy will say, well, I really want a 10%, I don't want to pay 11. And I'll do my best to get that, and and oftentimes I have to go back and say, look, I've got a guy who's willing to do it, but he wants an 11% rate. Do you want to do this? But I'll almost never change my fees. I'm not going to go back and say, well, I know I quoted you 3, but now it's 5 points because the lender wants points, which is usually a lot
But one of the
more.
things that you could do, though, is you could give references of other borrowers who could vouch for the fact that you stuck to your word.
Well, that's the other thing. So if anyone asks for an upfront fee, say thank you for sharing, and hang up and call the next person on your list. And you want to go. Obviously, you want to. If you're doing a Google search for hard money lenders, that's where you're going to oftentimes find those also ran companies that are maybe not legitimate. You might want to go to a website that's called Private Money Lending Guide. They're based in Southern California, Private Money Lending Guide, and that not only is there great information on how to find reputable private lenders, but for example, we're listed on that, as well as a number of other private lenders all over California.
Well, I got a quick story. When we were doing hard money loans, we had a situation where there was a church buying the building because they were going to turn the old theater into their sanctuary, and they had run into an unscrupulous hard money lender from Oregon, and the guy basically had made certain promises to them, and knowing that they had to close by a certain date, and when the pastor got in to sign the documents at escrow, he snuck in a clause that said that the hard money lender was going to own 51% of the building. Oh, and the pastor caught that and said, well, wait, we didn't agree to that. And the lender said, yeah, I know, but you don't have a choice now, because if you don't, you know, the price goes way up and blah, 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 and all this stuff. And pastor just on his good word said, you know what, I'm not going to do it.
Yeah, asking for references is actually really good. And
that's a really good idea.
Because they may not ask for an upfront fee, but that doesn't mean they're going to do something unsavory at the end when you basically are relying on them to close.
Okay, so how do people get a hold of you if people are looking for a scrupulous lender?
Absolutely. Well, our website is pacificprivatemoney.com. Of course, that's all one word, pacificprivatemoney.com, or you can call us at 415-883-2150. And of course, you can go to the Best of Investing website, and our information is there as well.
Very good. Okay. Robert, an email we received for you says, I have heard the term buy down the rate. What does it mean, and is it a good idea? That's a pretty good question.
It's a good question. I'll get into it later whether it's a good idea or not. That depends on a lot of other factors. But anytime you're looking for a mortgage, the banks want to make a certain yield. And they say, we can give you a certain interest rate and we'll charge you a certain fee for that. Or just take an example, we can give you a 30-year fixed at 4%, and for that there won't be any points. And we could also give you, if you wanted to have a lower interest rate, it would calculate how much money they have to make some other way to give you the lower interest rate. And so they would say, well, we'll give you 4% at no points. We'd be willing to give you a loan for 3 3/4%, 1/4% lower. And generally, you can get a 1/4% lower for paying 1 point, which is 1% of the loan. So on a $400,000 loan, you would pay $4,000 to reduce your interest rate 1/4%.
Which would be about 4 years worth.
Usually it takes about 4.5, 5 years, I tell people, to get their money back from that investment. And a lot of people say, well, the interest rates are so low, I'm never going to move, I'm going to have this for 30 years, I really want to do it. And my experience in 20-some years in the market is, for whatever reason, even at these low interest rates, mortgages tend to have a life of 5 to 7 years. People, as family grow, they buy another place, they get a job, and job changes, and they have to change geographically. So I don't like to see people pay today for a hamburger tomorrow.
Wimpy, there we go.
That's right.
So it's generally not a good idea, as far as I'm concerned, to pay money to buy down the rate. In fact, you can also go the other way and get a slightly higher interest rate and have the bank pay all the closing costs, which on loans could be $2,000, $3,000, even $4,000 between the bank's fees and the title insurance.
So it sounds like a case-by-case basis you'd actually
So
look
it
at.
really is something that we have to go over, and it depends on how much money they have, what they want to do, and their whole financial picture.
I like the way that you say that, because wouldn't you think that many mortgage loan originators would recommend that they buy down the rate, because maybe some of those points go in their pocket?
Pretty much not. With the new regulations, most of the lenders are they're set, and they're going to get a specific amount. It's going to be 1%, whether the clients buy the rate up or buy the rate down.
Well, that's good to know, because that would be a question.
Yeah, because most of the money goes to derivatives,
the government's tried to regulate so that
Okay.
Individually the mortgage brokers don't have an incentive to lead them into some one kind of loan.
And who's doing that credit default swap there, Robert? I'm just kidding.
Oh.
Well, that's good to know, that if your mortgage loan originator recommends or says, hey, you can buy down the rate, and if you're going to live in your house, that can save you X number of dollars over 10 years. So that should then be considered a real recommendation.
Yeah, definitely. It's
Not a veiled way
case
for him to put more money in his pocket.
Yeah. Robert, how do people get a hold of you if they want to refinance or just get a mortgage, a regular mortgage?
My company is RPM Mortgage, California Prime Mortgage Company, and they can go to our website at RPM Mortgage. They can call me on my cell at 415-515-1941.
Okay, before we cut to break, Lou, you're still in the studio here. You're giving us advice on 529 plans and retirement after 60.
Yes.
After 60 for those of us who are going to be approaching it fairly soon. And I think we forgot to ask how people can get a hold of you if they want some investment advice.
Well, I'm affiliated with LPL Financial, which is a registered broker-dealer. Probably the two easiest ways might be my phone, which is 415-256-8970. Again, 415-256-8970. Then my name, which is Louis, L-O-U-I-S, then a period, Batmale, B-A-T-M-A-L-E, at LPL.com. Louis.Batmale@LPL.com.
Great. All right, stay in the studio. We're going to get into some more economic stuff. Before we cut to the last commercial break, we had a special trivia contest here. The winner is going to receive 2 tickets on the Hornblower. And here's the promotion for them. Imagine yourself aboard. I'm good at this one, right?
Yeah.
Okay.
Don't
Hear
make
the
it
wind,
loud.
hear the wind
Yeah,
blowing.
wait.
Imagine yourself aboard a luxury yacht.
Luxury lot.
Let's try this again.
I have
Imagine
one of those.
yourself aboard a luxury yacht with your closest friends and family. Indulge in a deliciously prepared food and scenic San Francisco Bay views. Hornblower Cruises and Events offers 3 types of dining cruises: a free-flowing champagne brunch cruise, fun and lively supper club cruise, and an elegant 4-course dinner cruise. Fun for all ages. Book now at hornblower.com. You guys ever been on the Hornblower?
Yeah,
It's
wonderful.
great. Sometimes the bands are just fantastic.
Mhm.
The food is always good.
And the
Love
view,
that
the
place.
view's always gorgeous.
Okay.
Too bad, can't beat it.
All right, so here is the special trivia question. And here are the rules, okay? First of all, can't have won any prize on the Best of Investing. And then also, you have to email Edward tonight, edward@bestofinvesting.com, by midnight tonight. And next week, from all the answers we receive, the correct answers, we're going to randomly pick the winner and announce it next week. And here is the question. According to insurance statistics, this person's car insurance was once over $125,000 a year. Who was this person? That's
Really?
interesting. Can you imagine $125,000 a year? That's amazing. Okay, we're going to cut to the third and final trivia question. Now, Robert, you should know this one. Trapper John, MD, was a spinoff of what TV show? The first 3 callers with the correct answer are going to win a free 3-day 2-night stay at the Lighthouse Resort. Again, their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Trapper John, MD, was a spinoff of what TV show? Make sure to include your name, email address, and speak slowly and spell out your email for us, or 1 letter at a time. And we will be right back. Hey.
Should but don't.
For our senior co-host.
Yeah.
You don't know that
Trapper
one?
now.
Oh, you know that? Oh, come
Probably will
on.
when you tell me.
What reason do you know that?
Of course.
Okay.
They're going to keep me.
Yeah, you're going to keep you in suspenders.
Sergeant Preston.
That guy hosts
Sing it.
the real Trapper hosts an investment show, right? Wayne Rogers.
Does he really?
Yeah, on Fox.
Huh.
He has a website on Fox. He's on that Fox Bulls and Bears. Wayne Rogers.
Really?
Oh,
Yeah.
yeah. Is he doing that now? Because I've read that he's like this great entrepreneur.
Right. No, he owns a
That's
bunch of
right.
businesses, but
That's right.
he's always on there. Who's the guy
It
who
was
was
like Inc. magazine a couple
Yeah.
years ago. Or
Yeah.
something.
There's a guy with George
Success.
Soros who's always on there. He has the bow tie. Jim. I forget his name. He's on there with Wayne
watch any of
Rogers.
those shows.
They. Well, I watch him because that's where people.
Well, because you would watch them, but you know, like I'm a real estate guy. I don't care
you
about
would-
stocks.
you would watch that, yeah.
Yeah.
Well,
I didn't mean that.
Soros.
I know.
But
Just the way you said it, I just had
He had
would.
his
Watch
partner.
Yeah,
is,
you
a
would.
big commodities
you know,
trader.
it's so funny. It depends.
And people
on,
always wonder, like, does he invest his own money? Or does he just talk about it? It's kind of
Okay,
funny.
this comes from a Yiddish book. All right, it depends on how you put your emphasis, right? And the if you just read it, it's 2 tickets for her concert I should buy. Now, you could do that. 2 tickets for her concert I should buy, or 2 tickets for her concert, right? Depending upon how 2 tickets for her concert I should buy, or is it, right? So it depends on how you put the emphasis, and that's from the Yiddish book of The joys of
records.
Yiddish.
The Guinness Book of Records.
Yeah.
Everything
Yeah.
you want to know
I
about
know
Yiddish,
what it is.
we're afraid to ask.
Yeah, that's right, exactly. Okay, so let me figure out this segment here. Talk amongst yourselves.
Okay.
So I learned something today that sort of blew my mind.
What's that?
It was at Kelly Moore buying paint for a rental property, and they said that the industry almost ran out of paint last year.
Really?
All the stores were running lower and lower, partially because of China and India, and partially because the Gulf of Mexico oil spill, to close it out and try to make the oil go down, they used surfactants. And surfactants are used for paint, and all the surfactants were going to put the oil out.
Oh my gosh, I had no idea.
So they almost ran out of paint.
So,
This
that's
is
kind of
almost
This
ran
interesting.
out of
world's
paint.
getting smaller and smaller.
Yeah.
All the commodities.
How much time, Edward, for
We
you?
have-
I mean, I just want
For
you.
this- we only have 7 minutes and 40 seconds.
Yeah, I figured it'd be a short one
Yeah,
because we ran long on the last
Short.
one. Okay.
So
well, we'll be
besides the
fast.
paint story, what else are we doing?
Ready.
The paint. Well, the paint. That paint
Wanna
was
go?
interesting.
That is
Yeah.
interesting.
Wanna
Obama,
start?
what?
No, you want to start, and then I'll. You want to start the show, or do you want me to change it? I just ask him so I know if I need to change.
He's got to
the
change
date.
or not.
Change.
You're okay.
Change it.
You're okay dressed like
You're
that.
okay the way you are.
Just the way you are.
Oh, get in front of the
Yeah,
camera.
nice.
There you go. You're talking about change film?
Change my tape, or if you start now, I won't have to.
We're fine.
Oh,
We're fine.
what do you have, like exactly 1 hour and?
We got 10 minutes left?
No, I'm just talking.
Anything you want to cover? Specifics?
Yes, right, Robert.
I mean,
No,
do
this
we
is
want to
good.
get into Obama tax or just, I don't know.
Well, I've got this article from
Oh, yeah,
Bloomberg
yeah.
that says home prices rise in glamour cities, including
Right.
San
Okay.
Francisco. I didn't realize we lived in a glamour city.
No,
Okay,
it's
let's get into
definitely-
that and then we'll get
Yeah.
into the paint, okay? All right, ready? And as Jackie Gleason used to say, away we go. Very good. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hunt, Robert Jitt, and our special guest, Lou Batmale. You like the way I said that? Lou Batmale. And when we cut to the third commercial break, we asked this trivia question. Trapper John, MD, was a spinoff of what TV show? Robert,
Not
come on.
fast.
Come on, you.
Come on.
Go ahead.
MASH.
MASH.
Yeah.
Your favorite show. My favorite show. Well, one of
Our
my favorite
senior
shows.
co-host did not
Didn't
know
know
the
that.
Didn't
answer.
know that. And Mark, you've got a very interesting article there.
Well, this week in Bloomberg, I thought this was, I like the headline. It said, home prices rise in glamour cities, including San Francisco. So I didn't know if you guys knew it,
They haven't
but we
been
live
to
in a
the
glamour
Tenderloin.
city.
Yeah, they haven't been to the Tenderloin lately.
But it was just interesting in that, we've talked about the inventory really tightening up, and a lot of that has to do with the fact that even though there's a huge shadow inventory of non-performing home loans out there, the banks have not been foreclosing at the rate they were foreclosing a year ago and 2 years ago and 3 years ago. They've really slowed that down. Fewer homes are going to auction, meaning fewer homes are becoming bank-owned, and therefore fewer homes are being released on the market for sale. And that combined with the fact that people who want to sell are underwater and therefore can't sell their homes, we have a very, very low inventory of product right now, and that is causing a little mini bubble, not necessarily a return of a strong real estate market, but just simply supply and demand is causing prices to increase. And it's just very interesting that prices are up annually in San Francisco. It says here in the article, San Francisco home prices rose at a 16% annual rate in the 3 months that ended April. So,
Wow.
so that's
It's tax
just
season.
yeah, and that's according to Kay Schiller, which is one of the experts in tracking this information. So, I just and again, I think it's a false bubble really, and the big fear is okay, well, what are banks going to do with all that those performing home loans out there?
I don't know that San Francisco or the Bay Area in general is a false bubble. I mean, it didn't get hit anywhere near as hard as almost everywhere else in the country did when the real estate prices,
Very true.
even say in Marin County, went down 20–35%. The city hardly got hit at all. Very low.
Well, as a backup to that article, there's a follow-up piece. I saw another publication. They're talking about one of the things driving it were two main components. One was that the mid-market neighborhood, where I think Twitter and Zynga are located, and they got exempted from the city payroll tax. And they said now, like, the Mission's blowing up, and people are wanting to live in the Mission, and the rents in the Mission are huge. I was talking to someone down there this week. They said it's unbelievable. I mean, you're getting $2,500 for a flat in the Mission now. That was unheard of a couple months or a couple years ago. And then secondly, I don't know if you guys are in the city a lot. I'm in there for business, but they have these buses going through town. You're like, that's not a tourist bus. That's not a muni bus. It's not hitting anybody. It is. Pardon, sorry. It's actually a bus going to Google or some of the other campuses down in the South Bay, and there's a route they run around the city, like through Noe Valley or through Glen Park. And actually, it was on the news this week. If you have a home in that neighborhood within walking distance, within 2 or 3 blocks of those stops, it's a gold mine.
Yeah, it says
Or
here.
rental, yeah.
You're absolutely right. It says talked about the Noe Valley and Dolores Heights neighborhood. You know, multiple offers. Here it talks about a fixer 3-bedroom, had 12 bids and is in contract for more than $1.5 million. That's just unbelievable for a fixer 3-bedroom. So
Yeah, no, the city's driving itself right now. It's really amazing.
That is incredible.
It's an old microeconomy.
Okay, Robert, you were telling us off air something about paint and the lack thereoff.
Oh, this
Quick
was,
little story
this
there.
was sort of made my day this morning. I went to the
Made
paint
your
store
day.
and hadn't been there for a long time, and the prices were shocked to me how expensive paint is. And the gentleman at the paint store said that their store is a big national store, and they almost ran out of paint last year. They almost didn't have enough paint to supply their clients, and the reason was partially that all the ingredients that are going into makeup paint are limited compared to what they used to be, and there's markets. We're now in a world economy, and China is buying up those ingredients more than they ever used to, and India is buying up those ingredients. And one of the ingredients is a surfactant, which is used in paint. And I remember hearing that word as he reminded me that when the oil spill in the Gulf last year, they tried to put chemicals into the water to make the oil coalesce and drop to the bottom, and that was surfactants, the same surfactants that are used in paint. So it just made me realize how, in this world we're in, it really is a global world, and we are not insulated from what's going on.
Is
all over
China,
the
like,
world.
are they beautifying the country by painting it, other than drab green?
I think it's mostly primer.
That's my
So
favorite
that is,
color.
So we were so close to running out of paint last year, and the public didn't even know it. It was like the
No.
Bay of Pigs.
And now, if they
It's
could
like-
get rid of it, if they could get rid of spray paint so that you
Yeah.
don't get all that graffiti, I wouldn't be too upset with that. They should make spray paint like, $100 a can. Then maybe a lot of these yahoos, they were trying to, beautify the city with their graffiti.
Oh, for the artists.
Or the artists, yeah,
Right,
exactly. That's what we call
whenever
them.
whenever they paint a tree, man, it just breaks me because they have to cut the tree apart sometimes to get that paint off. It's awful.
I haven't seen it too much on trees. I usually
Oh,
see it on
the
buildings.
city. Oh man, they get in trees and it's
Oh,
awful.
oh,
It's really
that's
disturbing. They scrape a tree and sometimes they damage it. It's just really a bad thing. It's just not.
It doesn't
I'm not
do
young
anybody
anymore,
any good.
Yeah.
Before we cut out for our thoughts for the day, any last words of wisdom for our listeners there, Lou?
Well, I'd say this: patience rules the day. We could get through this and be okay, and that's where you have to be careful.
Well, yeah, didn't even know it.
That's the way it works right now. Poetry is the only thing leading us to any real promise in the future. But
Can I invest in poetry?
yeah, collectibles are a hedge fund item. I know that much. But the end result is this: you got to hold on. Not because there's no better option. I'll do the Dana Carvey. 1,000 points of light.
Yeah.
The real truth of it is, if things end up being okay or even moderately slow, it is a big if. I will admit it's a big if, but you have to be patient. If it comes through, we'll be all right.
All right. Here are our thoughts for the day, and on that, words of wisdom. Who tastes dog food when it has a new and improved flavor?
I love alcohol.
And the things that come to those who wait may be the things left by those who got there first. Think
Right.
about that. And with that in part of wisdom, tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
Good
That's
show.
a wrap.
And you have 42 seconds
Good show.
left.